All right, welcome to the weekly prep video for the week of November 3rd to the 7th. In this video, we'll be going over the action from the past week from the indexes, liquid leaders, industry ETFs, then end the video with long and short setups going into next week, like I do with every weekly prep video. So if you guys enjoy it, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up to the Market Pulse Discord using the link in the comments section. Starting off with the indexes, NASDAQ up another 2% last week. We had a little bit of distribution on Thursday with the gap down. Pretty ugly close right at the low of the day, back under the 5-day moving average. And then with Apple and Amazon's earnings after Thursday's close, we had a nice big gap up on the NASDAQ. Right into this resistance gap, we sold off basically at the open, had a midday bounce and then a little late day sell off. Still up 2% on the week, up 0.5% on Friday, and still over the 5-day moving average. But we do have our first gap down, unfilled gap down on the indexes, which is kind of a warning sign for me. The sooner that we can close that gap on a closing basis, the better. But really, as long as we hold the 5-day and the gap here, even if we pull back into the 10-day, intermediate term, short term, I still think there's enough setups and enough growth stocks acting well where we could trend higher. But we are getting a little extended in the short term and getting some feedback with that extension. S&P 500 up 0.7% for the week, a little bit weaker because a lot of the strength that we saw last week was in mega cap tech stocks, which is more heavily represented in the Nasdaq versus the S&P 500. Similar gap down on Thursday, similar gap up and sell off on Friday. Still closed over the 5-day moving average. S&P 500 did take out Thursday's low before rallying, but still over that 10-day, and the support gap is kind of my line in the sand for the short-term trend. IWO, the growth stocks of the Russell 2000. We saw weakness all last week until Friday, where we undercut and reclaimed the support gap, the 20-day moving average, and then closed really well back over the 5 and the 10-day moving averages. After not being able to take out new highs, this is still a higher low for me until we take out that low. So line in the sand on this one would be a close under today's low would start to feel a little bit uncomfortable for the market. And then ARKK, another kind of risk on, risk off indicator that I use, flashed risk off on Thursday with a gap down, like an island gap down under the 5, the 10, the 20-day moving average. Really ugly close right at the low of the day. And then on Friday, we saw basically the opposite, a gap up, open on the low, reclaim the 20, the 10, the 5-day, and ate into that resistance gap. Wasn't able to completely close it, but basically as good of kind of a day one after that ugly close that you can ask for. So as long as we hold above Thursday's low, that is still kind of base building in my eyes. Then switching over so we can take a look at Bitcoin. Once again, rejected at the 50-day moving average, which is like a higher high, and then pulled back into the 200-day moving average, putting in another higher low so far. I don't love how quickly we're just coming back to this 200-day multiple times, but really until we break it and follow through with a lower low, this is just base building and a lot of chop. And then taking a look at Ethereum, pretty similar price action as well. We haven't taken out the low from October 10th, just kind of building below a declining 50-day moving average. I definitely wouldn't call this strong by any means, but it's still just tightening up. We could break to the upside or the downside. Crypto is just one of the additional data points that I use to kind of gauge the risk on, risk off activity in the market. Taking a look at the liquid leaders, we'll sort this by price percent change on the week. So first up, STX. This was a new addition after their earnings. They were up 19% on earnings. Followed through the next day up another 1%, and then gapped up on Friday with WDC's earnings. Sold off a little bit, bounced above the 10-day moving average, closed above the 5-day. Lots of volatility here, and it is relatively late in the trend, but still one of the leading stocks in the leading groups, up 9.3% for the week. Palantir, new all-time highs this week. Nice breakout on Wednesday, inside day on Thursday, followed by a gap up. Pretty weak close on Friday, but this does have earnings after the market closes on Monday. So really, we're just waiting to see what earnings will bring. SNDK up 7% for the week, up another 1.8% on Friday. Beautiful breakout into new highs on Wednesday, inside day on Thursday, and basically an inside day on Friday. Like technically, it was like higher highs and lower lows, but it's still consolidating over that 5-day moving average. And until we close below that, I don't see this doing anything wrong. Oh, whoops. Okay. I didn't sort it by current week. We'll just keep going with it. BE up 19.7%. It reported earlier this week, was up 18% after that report. Then secondary offerings getting soaked up over the last 2 days, little undercut of the 5-day moving average and Thursday's low uh, into that support gap before bouncing and closing well on Friday. NVIDIA up 8.7% this past week. They had their AI conference, which really saw some big inflows into the name, shooting into new all-time highs. Similar to the indexes, we did get our first unfilled gap down, which was confirmed as a resistance gap as we traded in that range, and then sellers stepped in, proving that there's evidence of sellers. But still, plenty of air to the 5-day moving average. Recent breakout. Again, like maybe this is a late stage move and this is like late buying. But until we close under the 5-day moving average, and even like the 10-day, this could come back and just be a breakout retest. So we'll take that day by day. Google up 8.2% this week, thanks to earnings. Nice big gap up. Only closed that day up 2.5%, and then a little sideways lower action into the support gap on Friday. VRT up 3.7% this week. Had that pretty wonky action around earnings, but then gapped up, followed through to the upside, and now just chopping, closing above the 5-day, letting that 10-day moving average catch up 3.7% that week. MU up 2%, 2.2% this week. Beautiful consolidation over the 5-day moving average and the support gap here, not doing anything wrong. And then AMD, very similar, up 1.3%, closing over that 5-day moving average. Nice consolidating here. And that does have earnings on Tuesday after the market closes. Getting into the industry ETFs, because this is the weekend video, I'll go through every single one, but I'll spend the most time on the ones that are most important in my eyes. So first up, we have nuclear and uranium. Really, the uranium names held up best out of this group, up 4.8% on the week. Love the action, close under the 20-day moving average, followed by a rally back up. Higher low, right on the support gap low, undercut and reclaim that, followed by a gap up. That's a great combination to keep the trend going. Now we're just consolidating the last 3 days over that 5-day moving average. We were down 1.8% on Friday, but still acting pretty well. XBI biotech ETF continues to be the strongest theme in my eyes, up another 4% this week. Has not closed under the 10-day moving average this entire run. I think people are starting to take note of the theme at this point, and really this looks incredibly, incredibly strong. Might be the next group, along with other healthcare related themes, to benefit from AI. Semiconductors, new all-time highs on Wednesday, pulling back into that 5-day moving average on Friday, up another 3.4% for the week. When semiconductors are strong, the market's usually strong and growth stocks are usually strong. So as long as we consolidate and then resolve higher, I don't see any warning signs here. IYT, the transportation ETF, up 2.5% this week. Still just kind of building out a nice long base here. Continues to build higher lows, higher lows, higher lows. And we'll see when Uber reports their earnings if we can break out from that base. Another theme that has been leading basically all year, but really isn't being talked about much, is the solar ETF, TAN. First Solar and CSIQ, awesome moves last week. Bunch of solar stocks are really setting up, and a few have earnings this upcoming week, but just incredible action. Up another 2% this week. Little ugly close at the 10-day, followed by a gap up and strong close thanks to First Solar, and new closing highs for the year, which is very bullish. IYZ, the telecommunications ETF, just a lot of volatility, but a close over the 5, the 10, the 20-day EMAs by Friday, which is nice. XLY really benefiting from Amazon's earnings where they gapped up and they were up about, I don't need to guess, I could just look this up. Amazon finished up the day up about 10%. That really helped out XLY, which was looking pretty weak. Had that big gap down through the 5, the 10, the 20, and the 50-day on Thursday. Now we just gap back through that zone, creating a little island gap. Hopefully, Amazon can stay strong and we start to see the rest of kind of consumers strengthening. But that is a spot in the like economy that we've seen some weakness in. And maybe Amazon is just masking that because it's so heavily weighted in this ETF. FDN, the internet ETF, also weighted with Amazon, got crushed on Thursday with Meta's poor earnings, and then kind of bounced back on Friday, back through all the key moving averages. Just a lot of chop here while mega cap earnings kind of finish up. Robotics ETF, nice higher low, higher low, higher low, close over the 5-day moving average. Really nice trend here. And again, another theme that could be benefiting from that AI push. XLE, the energy ETF, has been super choppy, has not led this entire cycle. We're starting to see a few names start to hit 52-week highs, and a lot of them are reporting this next week. But so far, this is just building higher lows. The 200-day is flat. If we pull back to the 200-day and find support there, that would still be a higher low. But for now, just kind of barcoding under that 50-day. Cybersecurity down 0.2% for the week, but really good action from Thursday to Friday. We had a test of the 50-day, then we had an undercut of the 20-day. That resolved higher by Friday. So just another higher low, and a lot of the individual names in cybersecurity, CrowdStrike, Zscaler, NET, really good strength there. So I think this is a group to kind of focus on. IGV, the software ETF, very similar action. Test of the 50-day, bounce, test of the 20-day, gap up, and reclaim those moving averages. ITA, aerospace and defense, little pullback to the 10-day moving average this week, closed between the 5 and 10, not doing anything wrong. Gold miners, this is still acting pretty weak to me. We had kind of a parabolic top with a ton of volume coming in on gold after it uppercut and failed at 4,000. This pulled back to the 50-day, which is usually a good risk reward spot. And we've kind of been bouncing from there, but on weaker volume. We'll see if this can like pull back, build out a higher low. But one thing that I'm watching, we'll cover it on the shorts, is a little rally there to short. XLV, this is the healthcare ETF, really starting to shape up nicely, building a bunch of higher lows. After it looked like this was about to break down under the 50-day moving average, September 25th, we had that gap up and then multiple really strong bars back through the 200-day and higher. And now we've had our secondary test of that 20-day EMA, little oops reversal on Friday, closing back up above that area. XLF, this continues to be the ETF that I'm monitoring most for potential weakness. We had that big dump on October 10th, which the rest of the market did as well when Trump like reignited the trade war stuff with China. This actually followed through lower. One of the few ETFs that actually took out October 10th's lows. Did that October 16th, but we didn't follow through from that day's low. Rallied back up to the 50-day. And then on Wednesday, gap back down through the 20, the 10, the 5, and closed week. Now we're just chopping below the 5-day moving average. We don't really want to lose financials. Otherwise, the rest of the market's going to be pretty tough to make clean moves to the upside. This could still just be a higher low, though. So we'll take that day by day. That was down 1.4% this week. KWEB, the Chinese internet ETF, still building out higher lows after that October 10th sell off, but Trump meeting with Xi, I would have expected a little bit stronger action here, and we kind of got a sell the news event. So, is this a sell the news, lower high, and then we take out those lows, or do we build out a higher low here after shaking out people at the 50-day moving average and then pop back through that area this week? There's a lot of Chinese equities that are starting to show great relative strength. And some that I'm in. So I'm hopeful that this does pop right back through those key moving averages. But I'm not going to argue with the market. If we start to roll down here and I get stopped out of those names, we'll just have to throw them back. UFO down 1.9% this week, but I do like how it's consolidating. Another potential higher low, really starting to tighten up here, and a break through that 5, the 10, the 20, and this little resistance gap would be a nice sign for risk on. If we take out and close below today's low or Friday's low, that would not be as ideal. PEJ, the entertainment ETF, Another ETF that I use to monitor like the average consumer, which has been struggling in America lately, rallied up to the 50-day, rejected from there, gap down, another gap down, and then still trading below all the key moving averages. 50 days starting to flatten out here. So we want to get back above that area as quickly as possible and really firm this up as a higher low. Otherwise, that 50 is going to start to decline and put pressure on the rest of the group. ARKG, really nice response on Friday of 4.5%, little gap up and push through the 5, the 10, the 20 day after like a little bull flag here. Had uh, some news that I need to look into more over the weekend, but a theme that is another healthcare adjacent theme that I am focused on. I don't have any exposure in this area just yet, but we'll watch for a higher low to build, and then hopefully we could take out that resistance gap. Blockchain ETF and kind of like data center related too. Bounced up, put in a lower high, gap back through the 5, the 10, the 20 day, and confirmed that as a resistance gap so far. Down 3.2% this week with a couple key stocks reporting this week. XME, metal and mining, down another 3.2%. Just a lot of weakness from that parabolic top here. We gapped down, had 1 day rallying back up, and then that major break of the trend kind of sent us lower. Inside day on Friday, and I think will be really easy just to break through Friday's high to the upside, and we probably do kind of rally and put some pressure on these previous highs. But a break below, then you got that 50-day moving average and previous gap at $93 to watch. Home builders just extremely weak here. We had the FOMC meeting this week where they announced a rate cut to the Federal Reserve rates, and home builders sold off on that information. So good news, lower rates for home builders followed by bad price action is not a good sign for the theme overall. Just sitting on that 200-day moving average, which is now flat here. XLP down 3.5% on the week and really looks like you got your stage 2 uptrend, your stage 3 top, and a stage 4 decline. We're under all the key moving averages here. XLB, very similar, just under all the key moving averages, multiple gap downs through like the 200-day this past week and a big pickup in volume. Not what you want to see for the really for the economy. Like XLP, XLB, those are economy stocks. And then tech stocks are still acting pretty well. XRT, the retail ETF, another way to kind of track the average consumer, and down 4.4% this week. We rallied back up into the 50-day moving average, followed by a gap down on Wednesday, a gap down on Thursday, and then weakness on Friday. Not good overall. And then MSOS down 5.5% this week with a nice rally back on Friday, 4.4%. I really don't think this theme goes anywhere until the government shutdown ends and they can reschedule cannabis. Until then, your guess is as good as mine when this starts to pop up. So it's not really going to be a focus of mine until then. Before we get into the long and the short setups, I want to go over just some of the key earnings that we've got this week. Action-packed week. Make sure that you know when the stocks that you own or the stocks that you want to own or the stocks in the like groups that you own or want to own report. Plenty of growth stocks this week. Before the open Monday, Cipher, Berkshire Hathaway already reported, ON Semiconductor, Fubo. After the close on Monday, we've got Palantir, HIMS, NVTS. Tuesday, we have Uber, Shopify, Spotify, Hut, UUUU, AMD. I'm not going to read the entire list. I use Earnings Whisperer. I always check this. And it doesn't show every single stock on this picture, but you can go to their website, just click that link, and it'll show you a calendar of all the stocks that are reporting. And then also, I want to cover the NAAIM Active Investors Exposure Index. We really ramped up. We went from 90% invested to over 100% for the first time this entire year. You can see over to the left here. We are kind of building this base, and now this looks like a base breakout. So is this the time where investors finally capitulate and go all in right after the market has really ramped up, and then they're going to have to unwind that exposure? That is definitely a potential outcome that I'm watching. Usually over 95% is my threshold where I start to look for things that are breaking down, reasons to get a little bit bearish and to like pull my foot off the gas. And right now we've seen really weak market breadth. Stocks are starting to break down, but as market breadth weakens, we're seeing money really just rush into a smaller group of names, which, if you're invested in the leading stocks, in those leading groups, that's the type of environment where you make a lot of money. So even though this is elevated, the leaders are still acting well. Mega caps are selling off a little bit after their big run up. But I still found plenty of long setups coming into the week where I've got a bunch of alerts. If they break to the upside, that's still bullish to me. This can go over 100%. Obviously, it's over 100% now. It peaked at like 116 back in 2021. Um, so we can still get more long, and we can see rotation from mega cap stocks to smaller growth stocks and really see that ramp up in risk appetite. Or we could see everyone just kind of like step back, try to de-risk with all these earnings. Again, we'll take this day by day, but for now, the indexes are acting well. ARKK and IWO are shaking off Thursday's loss, and Bitcoin and Ethereum are not breaking down. So until we see further follow through on some of these names and some leaders actually getting hit, say Palantir misses earnings and they gap down, then you want to build evidence and to get bearish and maybe take risk off the table. Um, right now, these are all just kind of secondary indicators that it's like, hey, maybe it's time to like be ready to sell, but missing the last couple weeks of a big move up, a big acceleration run, like that can cost you as well. So take things day by day, honor your stops, and everything is going to be okay. Getting into the long setups, I actually found a bunch of setups to cover and had to narrow it down to 15. Now, this has happened before when back in January, February this year, where we had all those kind of speculative stocks rocket in December and January. They pulled back, and then we had a bunch of setups as things contracted, and they all broke to the downside. So just because I found a lot of like consolidating stocks doesn't mean they're all going to break to the upside. If they start breaking to the downside, there's our feedback to get defensive. But I will order this by average dollar volume. So most liquid at the top, least liquid at the bottom, and we'll go through them. Coinbase reported earnings on Thursday night, gapped up after that close under the 50-day moving average. If Bitcoin and Ethereum don't continue to break down, this is a really nice looking base. Coinbase, when it does get going, it can make very quick linear moves. So if we do get a bounce in Bitcoin and Ethereum, we had a little ugly close on Friday, but I would just be looking for a gap up on Monday, pull back into that closing price from Friday, right around 344, and then just manage risk uh, 2 or 3% from there. A lot of times you see these squats and people think they automatically have to reverse and go lower. And there is a resistance gap here, so I wouldn't fault you for that. But without the actual follow through, this squat could just be shaking out the weak buyers at the end of the week. And then everyone has to get back in after we get a gap up. So watch for a gap up, pull back into that closing price from earnings, and then manage risk from there. IREN, this has earnings on November 6th after the close, so Thursday. If that's too close for you, just skip this one. But we had a nice undercut of the 20-day moving average, bounced up, higher low on that 20-day, and another gap on Friday. You could take this on strength, just gap up through Friday's high, and then manage your risk at the low of today, or sorry, the low of Friday. Otherwise, I have alerts lower if we can undercut that 20-day moving average and the gap from Friday. Then I would just manage my risk at 55.50 under that secondary gap. ASTS has been a monster stock this year. Recently rallied from 36 up to 99. Pulled back under that 20-day EMA, but we found buyers at that support gap, rallied back up, rejected, put in a higher low on the 20-day moving average and another gap. Very similar to the IREN setup. I would rather take this one on a little undercut of Friday's gap and that 20-day moving average, right around $76, and then manage the risk against Thursday's low. CrowdStrike, we talked about how cybersecurity has been acting really well. CrowdStrike, in my eyes, along with NET, are the two leaders in that group, with Zscaler kind of the third. Really tight price action over the 5-day moving average after making new all-time highs. Exactly the price action that you want to see. Even with the indexes pulling back, this is just chopping sideways in consolidating after that big move. If we get weakness in the market Monday, Tuesday, Wednesday, pull back into that gap zone and the 10-day EMA right around 530 would be the buy spot for me. Then I would get my stop under the low from October 27th. Path, this is a name that I have been patient with, and so far I'm glad I have been. Nice rally from $11 up to 18, pull back into the 20-day moving average, rally back up, and now we're tightening inside day on Friday, back at that 20-day EMA, but at a higher low. If this breaks to the downside, chances are we just need more time to build out here. But just looking for a break through today's high, probably through that 5 and 10-day moving average as well. Stop would be the 20-day EMA. Futu, just about the strongest stock in China right now, nearly at all-time highs, which no other Chinese stock can say that at this point. No other liquid Chinese stock can say that. So the leader of the group was the first to really get going while the rest of the group was still building out a base. It was the first to correct, and people probably got sour on it. I did as well. I got stopped out and then very quickly built out a higher low, gapped up. And while the rest of the stocks kind of pulled back kind of later this week, Futu just strong over that 5-day EMA the entire time. I will look for a pullback into what would be a rising 10-day EMA as we build out this last handle before a break into new all-time highs. Looking at that like 187.50 area, let that 10-day EMA catch up, and then buy against there. Stop would be 2 or 3%. NIO, another Chinese equity, little pullback to the 50-day, oops, reversal from there. Built out some higher lows here, shake out of the 50-day moving average on Friday, and nice little pivot at 725. If we gap down on Monday, then take out that area, like a red to green move. That would be the buy spot versus whatever the low of the day is. It would be even better if Monday, Tuesday, Wednesday, we could get some tightening action here, let that 50-day moving average catch up so we can get in a little bit closer to the 50-day and then manage our risk against Friday's low. Then let me just jump to the last Chinese equity, XPEV. This is, to me, one of the most beautiful bases I've seen in the market. We can go to the weekly chart if it will load. Yeah. Weekly chart here, multi-year base, does not get cleaner than this. Higher lows, higher lows, higher lows on the daily chart, continues to build out. I was really bullish this name right about here. I had a pretty nice size position in this, and then we had weakness, and I got stopped out on the 9th. Thankfully, I got stopped out on the 9th because on the 10th, we had those Trump tweets come out, and that kind of punished Chinese stocks. But very quickly, this came back through all the key moving averages. And then all week last week, we had accumulation days where we closed over the open every single day. Because we're still in the base at this point, I'm trying to build my position closer to that 10-day EMA so I can handle a little shakeout to the 20-day if it needs to like build out one more higher low. But once this gets going, a 3.5 year base with this type of consolidation, my guess is it can have some pretty awesome moves to the upside. So pullbacks to the 10-day moving average, that's the spot where I would be more like just building into the position, couple shares at a time, whatever is right for you. And then I'll top it off on the true breakout. Back to the rest of the stocks, Wayfair reported earnings last week. Awesome move up 23%. Another stock that's breaking out of a multi-month base, actually kind of like a multi-year base. Pulled back in 2022. We're breaking out of that entire range right here. Awesome, awesome action. After that earnings gap up, we've just had 3 days of consolidating over the 5-day EMA with volume lightening up on every single candle. Exactly what you want to see after a nice move up. So break through Friday's high, stop at Friday's low would be the trade there. NXT, this is a solar stock that's already reported earnings. Nice gap up on earnings and then just chopping sideways. Little pullback into that HVC, the high volume close from earnings would be the buy spot. My stop loss would be the low of the pullback under the 10-day EMA. GH, I've talked about healthcare and healthcare related stocks really starting to set up and lead. I think GH is one of those to keep an eye on, up 27 or 28% on earnings this past week. Friday, solid action, just chopping sideways. Could build another couple more like inside days as we tighten up, just like Wayfair. So I'm not in a super rush to trade this. If we get a big gap up and then retest that HVC, that would be viable versus Friday's low. But I would love for this to chop for a couple more days and then use the reclaim, like a rally back through that HVC level as the entry so I could keep my stop a little bit tighter. AAOI has earnings on November 6th, which is Thursday after the close. This is a base that I've been watching for a very long time, and I have not found a way in quite yet. Because the 200-day is going flat and because earnings is around the corner, I don't want to be buying on strength. I want to be buying on a shakeout. And we have the 10-day moving average in the support gap zone for that. Undercut and reclaim of 34 would be the buy spot. Stop would be under whatever that day's low is. Next, we have PL, and this is a stock that I took a position on Friday. Highest volume ever on earnings on September 8th. Did a secondary offering that got soaked up with closes over the 5-day EMA the entire time. We had an inside day on September 16th. Then the breakout resumed September 17th. Basically an 80% move up. Pulled back under the 20-day, which a lot of people just, when the stock's under the 20-day, they forget about it. That's why we have the support gaps as kind of a secondary spot where buyers can step in. Undercut and reclaim that area. Lower high, higher low. And then I took it just on a on the breakthrough Friday, or sorry, Thursday's high on Friday. Pull back into the gap zone, and I will be a buyer and manage my risk against Thursday's low because it wasn't a very large position, but I love how this is flagging out. I love when stocks have the highest volume ever and they go through their first consolidation. That's usually great risk reward spot, and it's in a really nice theme as well. So you could take this on strength. I would be a little hesitant to do so. I would rather kind of build up the position on a pullback into that gap zone. NUAI, this is more of a speculative name, but the volume profile on this is insane. Like every big move up has come on massive volume, and then the volume completely disappears as the stock pulls back. And when you have a stock that does that and that's tightening up with closes above the 5-day EMA every single day, it's a stock to keep on your radar. Maybe this is a little bit late in the cycle and needs like another like true pullback to build out a base. But still, five closes over the 5-day EMA, no volume the last 4 days on those shakeouts and consolidation. So just looking for a breakthrough $6, stop at Friday's low as the trade there. Then MIR, another earnings gap up 18%. They do testing around nuclear sites, which if we're going to use nuclear energy to power AI, this is kind of a beneficiary of that kind of theme. Consolidations on Thursday and Friday, just under that HVC level. Recapture of the high volume close would be the buy spot. Stop would be Friday's low. Then on the short side, didn't find too many setups. So that's why I'm a little bit hopeful that we get some solid growth stock earnings this week so we can continue higher. But a couple stocks to watch. MSTR has been just very, very weak all year long. Never took out the highs from November 22nd, the blow off top has been relatively weak compared to Bitcoin. That's an understatement. Under all the moving averages, we did gap up with earnings, and at some point we're going to get a rally back up, and that's where I would look to short. I don't want to short on weakness as it's already made this massive move down. So let it rally back through the 10-day. And if we could get a rally in Bitcoin, this will probably rally as well because late shorts will get stopped out and be squeezed. So into that 20-day, even that resistance gap around $300, that's the spot that I would look to reshort the name and then just keep a stop over like 310. OKLO had a really, really nice move the last couple months. Starting to see some weakness here. This is one of those names where you could say, hey, we bounced, we're putting in a higher low, it's time to break out. I wouldn't argue with you there. We're just starting to see like some of these names with no earnings, no sales. If the market is to roll over, this could be a lower high overall, and then we could start accelerating the downside and actually building out a base overall. So I would just look for a little gap up on Monday and then a loss of the daily VWAP as the entry, stop above Friday's high. Gold miners kind of covered this with the ETF section, the industry ETF section. Looking for a little uppercut and fail of that 20-day EMA and this like 3-day pivot as the entry for the short, so that I can manage my risk above kind of the highs of this entire consolidation. I don't really want to take this on weakness because we could just kind of shake out, build a higher low, and then get going. So I want to really tighten up my risk. You're more likely to get stopped out in that kind of setup, but when it does work, you get multiples of your risk as the theme breaks down. And that's what trading is all about, getting multiples of your risk when you're right and keeping your stop nice and tight. IONQ, this has earnings on November 5th, so maybe a little bit too early. I got stopped out of this on Friday on my short as it popped back up to my costs, and I just didn't want to hold it over the weekend. What I would be looking for here is a gap down on Monday, opening range break, just like a 5 minute to use as the entry. Stop would be Friday's high and that 20-day EMA. And if you don't get like significant traction Monday, Tuesday, not worth holding into the earnings on on Wednesday, even though like earnings wise, these companies don't actually have much, like 20 million of sales. N- More speculation in this group. Costco looks very, very primed for its stage four downtrend. We've seen recent stocks like MMYT break into their stage four downtrend. SFM, another grocery store, kind of like Costco, really break down earlier this year. So even though we're in a very strong bull market, there are stocks that are breaking into their stage four downtrends. Costco looks like it's going to be one of those. We built lower highs all the way down, rejections at that 200-day EMA, then the 50, a lower high at the 50. No more support gaps until 880. Would just look for a little rally back up into the resistance gap and the 10-day EMA as the entry, so I could keep my stop over the 20-day EMA. But you could take this just with the breakthrough Friday's low as well. If you wanted to take it on weakness, it does look ready to just roll over here. BMNR, this is kind of the opposite of Coinbase in my eyes. If crypto does start to break down instead of like putting in a higher low and rallying back up, this is a name that it's already made its big move. There's multiple resistance gaps lower. Everyone is trapped at higher prices. That's why you see rallies into the resistance gap get shot down once, twice, 3 times, and then again, and then multiple gap downs. Because we've already made this move down, I would be looking for a little bit of a rally back up into the 10-day EMA and the $50 spot. Uppercut and fail that. That would be the entry as we reclaim the high of that resistance gap, and then keep my stop over the 50-day moving average. Circle, same idea, has been relatively weak. You could argue this is building higher lows. I just see this as relative weakness. A little uppercut and failure of the gap from Friday, or sorry, from Thursday's gap down, and the 50-day moving average right at that 132 area would be the entry. Stop above the 20-day EMA. Carvana, the stock that everyone loves to hate as it makes monster moves from $3 up to $400. This has to be like the best comeback in the history of the market. Maybe Amazon, another one back after the bubble pop, but Amazon, I don't know. Either way, this is starting to actually look like it's rolling over. We had a uppercut and failure of the previous highs on the last earnings, then sold off, rallied back up with a strong market, but recently a lot of distribution as the average retailer has come under pressure in America. This is the first gap down on earnings that didn't like immediately respond back higher. Down 14% on earnings, then some weakness, bouncing at the 200-day EMA on Friday. Because the 200-day is right there, I don't want to be shorting against a key moving average like that. We'll wait for a rally back up into like the 320 area, at least let the 5-day EMA catch up to it as the entry. I'm not in a rush to get short this, but I do think that this trend has changed and now we're going to be starting at least like a longer term base build. And then last, we have NNE, another nuclear themed stock that really didn't participate in the rally like OKLO, like LEU. Still had some pretty crazy moves, but uppercut and failed at that resistance gap. Came back to the 50-day moving average and has just been wedging up since. We did have a nice bounce at the 20-day EMA. But now, where people are still like buying into this, what I would look for is a gap down on Monday, an opening range break to short, and then get your stop above Friday's high. So that's going to be the weekly prep video for the week of November 3rd to the 7th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. I hope you guys have a great weekend, and I'll see you guys on Monday's video.